Good morning, everybody, and welcome back for SusTalks number 12. Today we have two young entrepreneurs recently have joined the climate action and sustainability movement 8 months ago. They're not yet in the mafia, but they are mentees of one of our mafiosos, Ravi Kumar. So we are excited to see what they've brought to the table. I believe it's going to be filling a very key part of the ecosystem, specifically around making green finance and green assets accessible to retail investors. Beyond just the equity markets. It's an exciting idea. It's ambitious. We think what Pyse has built is quite a cool product. And I'll hand it over to Vinay and Kostap to take us through the next half an hour uh, to guide us through what Pyse is. And then we'll do a Q&A and collaboration opportunities post that.
Right. Thanks a lot, Anirudh, for that introduction. Huge thanks to everyone here who've attended this call on a Saturday, right, to hear about what we're doing. As soon as the invite was sent, Vinay and I were bombarded with quite a lot of LinkedIn connections also. So we're glad that people were interested in our idea even before we spoke about it. It's just amazing to see that on its own. So my name is Kaustubh. Really sorry my video is not turned on because of some bad bandwidth issues. A reason that all of you guys here ever since work from home has started. So I'm sure you can bear with that for now. Vinay will be on video, and I have my co-founder Vinay there on call. Hi. So we're taking this opportunity to talk about an issue that's actually pretty close to our heart, right? We understand sustainability. It's been almost a year and a half since we've come up with this idea. And the more and more we start looking into the idea of sustainability, the more we are driven to actually solve the problem that we are solving right now. In the most basic terms, right, if I were to explain to you guys what we do, I'd basically say that we create a brand new avenue for retail investors, right, for people like you and me, to put our money and invest in a purpose that we genuinely care about. Now, in basic startup terms, you'd call us a fintech platform. But what we really want to focus on is the impact side of things that's created because of your investments beyond just the returns that you would possibly get, right? So that is what we want to focus on. So we basically say that in Pyse, we are a combination of both fintech and impact. And you'll hear this word impact a lot throughout our presentation in different contexts. But to be very honest, the idea of impact actually surrounds our product and keeps it alive, right? It's core to what we build. But before we get into the specifics of the problem that we are solving, what we are doing right now, what our product is looking like in 2020, what we felt while doing this presentation was, I think it would be a good idea if we share what our origins was like, right? Because the original idea for Pyse isn't exactly what you see right now, the one that we're going to present to you. So we'd like to go take a trip down the memory lane per se, and explain to you where we started off from, right? The original idea believed in the idea of collaboration, right? A collaborative network. What we wanted to create was an incentive economy that revolved around the idea of impact. We wanted to create a consortium of MSMEs and SMEs who would come in and join a group, work with each other, collaborate with each other towards their sustainability goals. All of this was driven behind an incentive-based economy, which was called an impact token, right? An impact token is basically an economy which gets better when more and more people start working towards social, environmental, and economic good. So let's say there were SMEs that were, let's say, reducing their carbon footprint, creating new jobs. The value of that network starts increasing. The idea behind this was to bring in that same network effect that you probably see in places like Instagram and Facebook, down to sustainability, and see how exactly we can get people to collaborate, work together towards their sustainability goals, allowing people to do good so that everyone else gets better, right? In general, in theory, the idea sounded great for us, right? It was a great start. It was unique. We hadn't seen this in the market before, but there were a lot of hurdles that we faced. There were majority of the issues were trying to see how exactly could we get this investment down to people like us, right? Retail investors like us. And probably even see the legal and compliance issues, because that was the biggest hurdle for us. We didn't really know how we could get this to the market very easily, and we felt that this idea was a little too early to the time that we had started. So what we did was we took a step back, right? We spoke to our friends and family, pitched this idea to them. And the first thing they came and turned around and told us was, hey, listen, can I actually put money into sustainability projects like this, into sustainability, right, in general? Because all I thought I could do was basically set up a rainwater harvesting system in my house, and I was pretty much done, right? Sustainability in general is an elite only problem was the general sentiment that we got from people we spoke to, people like us, right? So we took a step back and we broke down this original idea of an impact economy down to its bare bone structures. And we realized that we're essentially solving two basic problems, right? The first problem being is we wanted to create an avenue for people like us to invest into sustainability. And the second thing we're trying to solve is with this entire impact token story, we were trying to bring in standardization and metrics of measure to impact itself, right? Today, I can come into this call right now and tell you guys, and this is an example I give to a lot of people saying, I can come into this call today and tell that I contributed to environmental good by not driving my car for the last 6 months during the pandemic, right? But there is no general metrics of measure for people like us to come in and say, hey, listen, this is the impact that I've created. These are the number of jobs that I've created. This is the carbon footprint that I have reduced because of the investments that I've made, right? So essentially, these were the two problems that we wanted to solve. So what we did is we sat down and we realized, hey, listen, I think we should redefine and restate our problem statement, which is where our solution of 2020 today comes into picture. Vinay, please go ahead with the problem statement, how we started it.
So before I go into the actual problem or how we solve it, I think it's better if we start with the problem statement itself. And if I had to break down the problem statement, it would be two aspects. The first one is why this, and the second one is why now. So what we realized is the Indian investors today are not that excited about putting their money into risky asset, right? They're not really excited to put their money into, let's say, stock market or any product that they're not that aware of. When you ask a typical Indian middle class family what they want to put their money into, it's that normal answer that says fixed deposits, PPFs, at the max real estates. Outside this set of products, there's nothing much they look at. And what we realized that, especially with sustainability related products, is that a lot of people are interested in contributing towards the impact, or they want to do something back to the nature. But the problem is it doesn't go apart from anything vocal, right? People just run hashtag campaigns that say go green or green warrior, or they take part in marathons. But if you ask them anything more than that, they don't really have a solution as to how they can go about it. So what we've observed with sustainability related products is the fact that there's a entry to barrier. Entry to barrier, when we say that, we mean that people are not that aware of these kind of products, or even if they're aware of these kind of products, the problem is the capital barrier required for these products is really high. So let's say you want to set up a solar panel or rooftop asset. It's not something every Indian investor or every Indian family is really looking forward to, primarily because they don't have the resources or the capital required for it, right? And the third problem that we've observed is that Indian investors lack an emotional attachment with their investments. And let's say you invest into a product, or let's say you invest into a house or a mobile. We've seen people go and boast off about it in their social media. We've seen people invest again back. Let's say you buy a mobile, you're going to buy a mobile cover, you're going to buy a tamper glass. You're going to buy so many more things to make your product look good, feel good, because you're emotionally attached with your product. But that's not the case with investment options, right? People don't really talk about where they've invested, primarily because you don't have any emotional attachment when it comes to products like fixed deposits or PPFs. So why now? When we talk about why now, the most important thing is, one, sustainability as a sector is growing rapidly, right? If you take just the solar sectors, we'll look into the numbers later. You have somewhere close to $45 billion dollars worth of requirements by end of 2022. And that is just solar. When you take about sustainability as a whole, the market size is so huge and it's growing rapidly, right? And the second thing we've observed is that fixed deposits or other fixed income instruments are losing their value significantly. SBI is coming in telling you that the fixed deposit returns are somewhere around 3 to 5% now, right? So that is one other problem that we've observed with the traditional or current investment instruments. So when we looked at solving these two problems, we came up with the Pyse. We feel that this solution is very unique to what we're doing and it's quite new. So if I had to explain what Pyse was, I would say that Pyse is an avenue, like Austap said, for retail investors to invest in impact generating assets. So what we do is allow retail investors to own fractions of these assets and gain revenues from there. So what happens when we say we fractionalize these assets is, let's say you have a solar asset, let's say it's a 1 megawatt asset, the investment size is somewhere close to 3 to 3.5 crores. As an individual investor, I really don't have that kind of a bandwidth to go and invest, right? The moment we fractionalize this and bring down the ticket sizes to, let's say, a 1 lakh or let's say 10,000, it gives me an opportunity as a retail investor to go and contribute to that impact which the solar power plant is generating, right? So we basically reduce the barrier to entry, saying the capital barrier is no longer there for you to invest in a product like this. The second thing is the products that we're looking at. We'll talk about more in the next slide. So right now we're looking at solar assets. Mainly we're looking at rooftop assets, and these assets generate a revenue close to 10 to 13%, which when you look at it is 3 to 4 times your fixed deposits or your PPFs or any of that traditional investment products, right? And the best part about this is they are risk free, right? So all the solar assets are backed by a PPA contract, which basically mandates that for 25 years, the off-taker of the electricity is bound to pay for the electricity he consumes, right? So we've reduced the entire risk factor of it, and that's exactly why we say that this product is less volatile. And our tagline there is to say that this product or the products on Pyse are not subject to market risks, right? And so talking about the platform itself, we've built the entire platform on blockchain. And the reason we've used blockchain is for two things. One, it obviously brings more, more robustness into the platform by saying that your audits, your transparency increases, the auditability of the system increases because we can easily backtrack the system. And the fact that you have an immutable ledger, it gives us more confidence and more security, right? And the second reason why we went ahead with blockchain is we wanted to, like Kaustubh said, we wanted to create an ecosystem. And this is not just an ecosystem or a community of retail investors. What we wanted to do was create a community of also the other side of things, right? The solar assets or the asset classes that we are looking at. We wanted to create a community of them. So when we create a blockchain network, all of these, let's say if we onboard a solar asset tomorrow, he can be a part of our blockchain network, validating all the transactions that happen on the network. Thus, like Kaustubh said, as the network grows, the value of the network grows, the trust in the network grows, right? And as Kaustubh said, the most important fact is the visible impact. Right now, like Kaustubh said, I can say that, I've cycled to my office for 6 months, but you really don't have a way of measuring the impact you've created. So what we're trying to do with the products we take is create or give a quantitative value to the impact that these assets are generating. So let's say if I invest 10,000 into a solar asset, I'll be able to tell you what is the exact impact you've created, right? And the second thing we've observed is that people don't really talk about their investments today. And that, like I said, it's because they don't have an emotional attachment. And by doing this, we want to give the people a pride of ownership so that they go out and make conversations about their investment, right? So like I said, Pyse is a technology-backed, impact-focused platform, which is basically into renewable or sustainability assets fractionalization. So talking about our asset portfolio, we are looking at two asset classes right now. One of them is renewable energy and investment assets, which is a long-term product. Like I said, most of these assets are 20 to 25 years, and the income they generate is almost 3 times your fixed deposits in instruments, right? And the second asset class we're looking at is green invoice discounting. And what we mean by that is we're looking at SMEs and SMBs that are looking forward or that are solving a sustainability related issue. And we're looking to invoice or discount their invoices which are raised for procurement or operation and maintenance of these assets. And the reason we believe this is important, especially right now in terms of this pandemic, is because most of these SMEs and MSMEs are struggling to maintain their cash flow, right? Even though they are out there to make an impact in the society, they're not able to do so because they're not able to maintain their cash flows. And we realize that this is a problem that needs solving now more than ever. And looking forward into the asset classes that we're looking to onboard in the future, we're looking at EV, we're looking at hydroponics, and we're looking also at urban agriculture. So at the end of the day, what we're trying to do is create a fractional blueprint. So where you bring in any asset class you want. Let's say we come and talk to sustainability mafia itself, right? You have a variety of assets. I've seen you have somewhere around 36 different kinds of problem statements you're solving. So if we can find asset classes here that can be fractionalized and brought onto a platform, we would like to create a black box where I, as an investor, can come in and invest into any kind of a product that creates a different impact. Let's say you have a product that's wastewater management, plastic recycling, or any of that sort. I'll have the option as a retail investor to invest into a product that I can relate to, that I can associate to, right? So that's where we're saying that we'll create a fractional blueprint of the assets. So looking in terms of the numbers, what we've realized that if we just take retail investors as such, we have a huge number of 67 million retail investors who are there right now. And when we look at the amount they've invested into fixed deposits, it's almost $1,000 billion, right? And even though I said that solar is a growing field, when you look at the investments required, it's $51.8 billion by 2022, which when you look at it is just a fraction. It's almost 1% or 2% or 10% of whatever your investments in fixed deposits is right now. So if we can convert these retail investors, a fraction of these retail investors, we can solve a huge problem that is there. And even if you look at the numbers in terms of the SME and MSME bill discounting itself, the numbers are huge, right? There's almost $4.86 billion of invoices discounted till 29. And the numbers are increasing now more than ever. So we believe that sustainability as a sector is growing huge. Like there's a huge capability even for retail investors to come and contribute to something that will create a real big impact. So talking about the impact story, I think I'll let Kaustubh take it from here. He'll be able to explain why impact is so important for us and what we are trying to do by when we say we're quantitative or we're quantifying impact, right?
So just to summarize the first section of the presentation, right? We will be launching our first round of product with the first set of solar assets on board somewhere around the end of September to the first week of October. What we are going to achieve in the coming 2 months post-launch is we want to standardize the process of fractionalization, right? If we are able to go and be successful with that, which is fractionalizing, let's say, solar assets or even invoices, the replicability of that process is what is going to allow us to create funding routes for more sustainability related projects. And that fractional blueprint idea backed by the technology that we're building allows us to achieve that, right? Just looking at the asset classes itself, like when I told EVs, hydroponics, these are things that people know exist, but like I said, isn't exactly a mainstream product because we didn't know we could put our money into it, right? So that basically solves our first problem, which is the issue of the fact saying, hey, listen, how do people like us put money into this? Because now we've reduced your barrier to entry with reduced capital requirement. We've also ensured that when you put in your money, it's safe, right? With the technology we're running. And we're also ensuring that wherever you put your money into, the impact is visible. Now, coming to the second component of a problem statement, which was the impact itself, right? The idea of standardizing the impact process, right? The idea of standardizing it actually was very important and core to what we did. And we wanted to bring that idea down from our original impact economy story down to what we're doing now. For people like us to show visible impact out of the projects we are investing in, it's very important to make it simple, right? And we wanted to take inspiration from something that we see regularly around us today. Something as simple as the nutrition chart that you would probably see at the back of a carton box, right? You look at a carton box and you see the constituents, you know exactly how many kilocalories you're consuming today. It's pretty simple, right? It's written in plain English and numbers. And that is exactly what we wanted to do with the assets that we onboard onto our platform too. So let's just take an example of a solar asset, right? A solar asset which is generating X number of units today and being consumed by someone. A solar asset on its own generates a lot of impact, right? It could obviously help you with reduction of carbon footprint. It would lead to the growth of multiple trees. It would obviously create a lot of jobs, and there's a lot of heavy metal that is reduced, usage of heavy metal, which was probably used in traditional electricity generation. what we wanted to do is bring this down to to unit economics level, right? Seeing exactly what one unit of electricity would generate, right? What impact would one unit of electricity generate? And the binding factor there was the rupee value to it. So let's assume that the reduction of carbon footprint by a solar asset was around 15 rupees. We basically give it an impact score of 15,000, right? Number of trees planted is probably 4 rupees per month, which is basically equal to 4,000 impact score. Jobs created is around 8 rupees, which would probably be 8,000 impact score, and so on. Since the minimum investment size on our platform is 1 lakh, we bring this impact score down to a factor of saying this much impact score is what you are generating per lakh of rupees that you've invested per month, right? Now, this is very simple to look at. Unfortunately, today we had some technical issues with the platform itself, so we're not able to demo it. But when you go in and check out the assets you want to invest in, you would see this impact, right? You would see exactly what's the impact that you're creating, and you know very well it's basically transparent, right? Now, a process like this, now how you see 4 impact factors over here, this is pretty much for solar. We'd obviously find out 2 or 3 more such impact factors in the future. But the more and more asset classes that we get into the platform, the more of these factors that we actually start identifying, right? So for today in solar, we could say carbon footprint and number of trees planted. But when we go into things like hydroponics, for example, you'll start seeing the amount of water that you save, right? The impact created because of that. The soil degradation and how much you've prevented that, right? Waste management, that's a different kind of impact. At the end of the day, this impact factor and this impact score is something we want to create as a standardized process. And what we want to create here is an umbrella of impact factors, right? Across different asset classes. So the more and more asset classes that we get in, the more of these impact factors that will be on the platform, right? And you realize as a retail investor, you don't just diversify your investments in terms of risk, but you also start diversifying your investments in terms of the impact that you're generating, right? So this is, once again, like I said, core to our platform itself, because we want to ensure that you know the purpose that you're investing into, right? With that being said, it encompasses the product that we have today, right? What we allowed, like Vinay told, was the ability to remove that entire entry barrier for people to come in by fractionalizing assets like this, allowing them to invest something as low as 1 lakh as of today, and basically get good returns out of it too, right? Now, the assets that we're looking at onboarding for the first round, which is a launch, are operational assets. These are assets that have been operating for about a year or more. So we know for a fact that actually the generation numbers is something that we can trust. The returns are good and the off-taker has good credit rate, right? To ensure that your investments are safe and your returns come on time. Now, coming to the, I'm sure Ani is probably already pissed about the fact that we didn't stick to the exact headings of the template that was given to us. So we'll get back to what we envision, right? To the template specifics. So our vision for 2050, right? It's very important for us because this is our North Star for building what we're building today, right? What we really want to see happening in 2050 are 2 very important things. We really, first things first, we really want to see this collaborative network see the light of day, right? We see genuine value out of this. We see a real collaborative effort that could come in from people helping and assisting each other in the sustainability goals. We can see this ecosystem growing to a point where, you know, it has significance in the sustainability industry itself, right? And the fact that everyone benefits from everyone doing good is actually a great idea. The second thing we really want to see around in the 2050 time is basically financial democratization. What we mean by this is we don't really want to be myopic in our view and allow people to invest in sustainability anywhere on this world, right? Sustainability related projects. There should be global impact at the end of the day. Now, assuming that by 2050, I solve all of the sustainability funding issues that are there in India, there are still people in Africa, there's still people in Bangladesh, there's still people in Australia, US, who probably still don't have the same facilities that we do. And we want to be able to allow people to invest in sustainability related projects anywhere in the world, right? And the ticket size should be something as low as a rupee, right? To be the best example that I could give you was is just the entire idea of a savings bank account, right? Now, a savings bank account in your own terms is a default choice for people, right? But when my ticket size goes down to 1 rupee, sustainability could also be a default choice for people to invest into, right? And the basic idea is we want to get sustainability down to the mainstream, right? Make it everyone's problem and not an elite only problem. So that is what we want to see in 2050. And that's what we hope that we would do, or we would collaboratively do for our vision of 2050. Coming to the question of what we would do if Jeff Bezos gave us 100 million today, I think the idea of building an ecosystem of sustainability related products is what is important to us today, right? Considering the problem that I had mentioned about how we spoke to our own friends and family and they were unaware of sustainability being a genuine sector, right? Something that they could contribute into. We feel that there are three basic major pillars in this, right? There's obviously the education angle to it. There's the collaboration angle to it and the banking angle to it. Collaboration, the education angle being is building awareness amongst people. Now, there are a lot of companies today that are doing the same, but we want to do this in scale, right? Allow people to understand what sustainability really means and how they can contribute into it. Collaboration is basically bringing an ecosystem of people who build that culture of sustainability, like SusMafia, who would come in and talk to each other about what they do in sustainability and how they could contribute. And finally, a banking ecosystem that looks at funding of sustainability related projects, right? So that being said, this is pretty much what our idea is, right? This is what we're trying to do. We're trying to get in sustainability related projects, fractionalize it, allow people like you and me to come in and invest and not just earn returns, but like we say in Pyse, we want to make investments a conversation, right? We want people like you to come in and talk to us about the investments that you made. We want to be able to share it and also tell that we've created that impact. With that being said, I'd like to end this presentation. Ani, you can start the Q&A.
Wow, that was phenomenal. I loved it. The idea of green assets, fractional ownership, accessibility across the Indian population down to a rupee level in 2050, it's a powerful idea. An idea worth sharing and spreading, not like wildfire, because wildfire is destructive, but like wildflowers. It's an idea I heard from Seth Godin this last week, because wildflowers are constructive. I think this ties into our narrative really well. I've already spoken with you at length, but there's questions pouring in from our mafia. I recognize a lot of the names in the mafia in the current call, but there are some names that I do not know. So I'd request you all to follow our standard practice of renaming yourselves with your name, hyphen your organization, and then dropping your question in the chat box. I can call out in order. Lavanya, first question is yours.
Thanks, Anirudh. Hi, everyone. This is Lavanya, and I work in the sustainable fashion space. Vinay and Kaustubh, thanks for your presentation. I echo Anirudh's sentiments. I personally can see myself wanting to utilize a tool like this. I have a question on you mentioning that you use blockchain. So I'm not sure if you're aware, but the energy impacts of blockchain are pretty high. So the primary source for using blockchain currently remains fossil fuels. And I quickly pulled this up as you were speaking that, for example, a single Bitcoin transaction that uses blockchain tech uses over 2 lakh grams of carbon dioxide per kilowatt hour consumed. And that's the equivalent of burning through 2 14-gallon tanks of gasoline in an average car. So first, how exactly are you using blockchain? Have you considered other alternatives of doing the same thing, which are more energy efficient? And B, as an investor, would I get the consolidated impact of my investment, which includes the energy impacts of blockchain, which essentially would negate some of the positive impacts?
Hey, that was, I think that's a valid question. What we did is we didn't delve too much into the specifics of the blockchain we're using. You're absolutely right about the technology actually being reliant on fossil fuels a lot, right? Mining a Bitcoin or mining an Ether on Ethereum, funny enough, the currency used there is called a gas fee, right? Which literally says that you are burning fuel there. The blockchain that we're using here, Lavanya, is what we call a private blockchain system, right? A private blockchain ecosystem is one that is not filled with the scale of a public blockchain system like the Bitcoin or the Ethereum that you're talking about. A private blockchain ecosystem uses the same computing power that your traditional servers would use to deliver the websites that you're seeing on your browser right now, right? It's a valid point. We have, while yes, the scale is smaller, the mining process isn't exactly computationally intensive like public blockchains do. But yes, there is a negative impact on the technology resources that we are using, something that we would obviously consider when we are giving it to you. We haven't really thought about that, but to address your question of blockchain itself being harmful for the environment because of the technology used and the amount of power that's consumed, the private blockchain ecosystem does not, probably uses a fraction, a minuscule fraction of the power that is required to power a public blockchain system.
Okay, thanks. Just a follow-up. Sorry, I don't want to take up a lot of space. I know other people have questions, but how exactly are you using blockchain?
So the data that's available, so we have two kinds of data here, right? We have transaction data, which is basically your money in and outs. We also have data on generation details of the assets itself, right? Which means the impact factors that you see on screen is basically derived out of the data that is present on the blockchain itself, right? So you can go back and trace to ensure that the impact factors we give you, saying 8 rupees is generated for trees planted, 12 rupees generated for the carbon sequestered. This is data that's verifiable, right? Now, the value of a blockchain ecosystem gets better when more and more companies start becoming validator nodes. Now, the general concept of blockchain basically says, hey, listen, we want to decentralize the idea of trust, right? So if today as Pyse, I go to market and say, hey, listen, there's an impact score of 8,000, someone's just going to turn around and say, hey, listen, why do I care? Right? It's your number, it's 8,000 oranges, it's 8,000 apples, I really don't care. But tomorrow, when you realize that people like, let's say, some of the mafiosos here on the call, their companies would become validator nodes on the platform. They use the same metrics as we do. That collaborative effort adds genuine value to the numbers that you would start giving to people, right? So what blockchain allows us to do here is to, one, bring that collaborative effort into play. And second is to bring accountability into picture. So I don't just give up random numbers. I can allow you to go trace that number back to the unit of electricity that was generated. I hope that addresses your question.
Okay. Manjunath of Smart Sustain.
Hi, Kaustubh and Vinay. Yeah, it was a good initiative because I've been working with the MSME sectors for last 1.5 years for their solar rooftops. The one thing they have problem is the capex, the funding for their solar rooftops. It's very expensive. And second thing is the awareness. We're talking about awareness. Many people, they think it may not be practical. Maybe on a cloudy day, the solar system may not work. It may not generate the output. So the two things, one has to tell this MSME sector is the awareness factor. It will work even on a cloudy day. It might be the percentage of, the energy generated might be less. And second thing is, there are very few companies who actually fund this, solar projects. It's very expensive. So I want to know how do you go about doing the awareness? Because I'm actually from the media background. I worked for a media house for almost like 20 years. Now I started a media house only on sustainability practice. I'm working very close with the mafia thing. So I'm really excited to know how do you go about creating an awareness for the MSME sector, Kaustubh and Vinay?
Right. That's a great question, Manjunath. So education, like you saw in our deck itself, is a core pillar to the product that we're building, right? We had a chat with Anirudh also saying, how exactly are we going to build awareness? Education is our core pillar. We need to keep that as a part of our product. I think the best parallel, so to be very honest, I don't think that we would be really disrupting anything or creating a disruptive solution for this. The best parallel that I can give you is what Zerodha is probably doing today with its Varsity application, right? Now, Varsity, to be honest, gained a lot of popularity during this COVID time because people are just sitting there and saying, where can I put my money? But Varsity showed that even if you are not aware of concepts like this, you can make the process a little bit more fun and engaging, right? Now that engagement and that learning content needs to be built around the same ethos and experience that Varsity would have built. And that's the same guiding principles that we are actually using in terms of the education that we're doing. Right now, for the launch of our product, we're looking at releasing bite-sized content to start with, right? Very small bite-sized content, something you can find out on our LinkedIn page also on a weekly basis. Bite-sized content like that allows us to, it's like a hook, right? Small content, you're engaged by the idea, you come in and then you start inquiring about it. On a longer scale, when we grow up, education will be the core pillar for us. Like I said, the best parallel I can give you, since we've not already built it, is what Varsity is to Zerodha today, right? The amount of money and marketing that they're probably putting into that product is what we would also want to put, because we believe that education is a core problem, not just for our investors, but like you said, for the MSMEs also, right? And we can't deny that. We can't run away from the fact that, hey, listen, I'll wait for someone else to come in and teach them how the sector works. Because if I want my idea to work, I should ensure that people understand what we do, right? But yeah, I think since we don't really have the product today, the best parallel I can drive is with what Varsity does with Zerodha.
Thank you.
Arjun?
Yeah, thanks. Guys, I have a couple of questions. The first one is about risk-return balance. Okay, so yeah, you threw up some really big numbers over there about things that need to happen. So in my experience, what I've seen is that most of the bankable projects get financing, and a lot of the projects that don't get financing have some structural problems of why they're not getting financing. Right, so you guys are trying to get finance to these projects from retail investors. So are you, what is your thought on that risk return balance? Are you going to say that, okay, this is a potentially risky investment, therefore your returns are high, or are you going to be going for low returns and targeting, stable kind of projects? Because the example that you threw up is a very stable project, right? It's a project already done, throwing up cash, etc. But, is that your primary sweet spot, or, exactly where do you guys stand there? That's one question. And the second one is around what you guys have learned from the experience of others who have tried to do something similar. So, I know of Minergy, a friend of mine who started that, who I invited to this call, but he was not able to join. He's done something, so we'll try to do something here. Another company out of Singapore, Distributed Energy, trying to do something similar. I know there are differences, but concept-wise, it's similar. Trying to get finance from individual investors into projects, right? So, what have you guys learned from that experience that you are applying to your own company? So, these are the two questions.
Right. To answer your first question, yes, the assets that we are first going to get on board are, the creamy layer, basically, right? This is what we really want to test the market out with, because if I'm competing as a new product against a fixed deposit, I'd really want to show them the good returns with the safety that exists. So for the MVP, our launch that's happening from now till December, which is when we are going to test some of our hypotheses, right, is going to be with that creamy layer. But yes, the idea of us financing green projects shouldn't just end with the creamy layer, because they would have got financing from some other person any which ways, right? We are exploring on how we can get that risk reward balance. While we started off, like Vinay said, saying, the only thing you have to worry about is the sun rising, whether the sun is going to rise tomorrow or not, sort of concept. We are actively trying to see how we can, manage the risk reward balance. There are projects that we got in our list in our pipeline, which probably don't provide the same returns or generation, or have customers and off-takers who are not really credit worthy, sort of. We haven't really struck that balance yet. Like I said, probably 3 months down the line, I'd come down and say we've completely pivoted from the idea that we pitched you today. But right now, it's the creamy layer that we're trying to target for the launch itself. Coming to your second question, could you just repeat that again? Don't mind?
Yeah, the question was what you guys have learned from other companies trying to do something similar, to, enable individual investors like Minergy, Distributed Energy, and a few other examples around the world.
So not just here in India, right? We've seen some of these companies prop up in China also, primarily because the two of us have been interested in blockchain and cryptocurrencies per se. We've seen a lot of people do the same idea in China and Australia also. See, in India, according to us, right, the challenge was not coming up with the idea itself. What we realized, the barrier for us was the entire legal and compliance framework, right? For us, when Vinay and I sat down, we spoke to Ravi, we spoke to our mentors. and we told them that this could be possible, they turned around and says, yes, the idea sounds nice. That took us basically a week and a half, right? And then we got down, we opened up our laptops, we started talking to people from the tax and legal and compliance issues. And we realized the next 2.5 months had just gone in that, right? Our learnings comes from the fact, not saying that the idea works or not, but we know the challenge exists in that legal compliance framework, which, to be honest, is what our team currently is trying to innovate on. We believe that if we are able to crack the legal compliance framework itself, it would be a huge barrier for entry for other people also to, come in and copy or make the same idea as we do. That legal compliance framework is where we are innovating. Today, we're launching with a basic vanilla structure of an LLP sort of a story, right? That says, hey, listen, your asset is parked in an LLP, people who are coming and investing become partners in that LLP, and you get returns on a monthly basis. But in the same process, while we're going at the launch, we are talking to legal and compliance guys to see how exactly we can innovate on the financial side of things itself. Because the innovation, according to me, here comes on that legal compliance side of things and not exactly on the idea. Because like you said, the idea has already been done by a lot of people. So right now, our focus is on saying, how do we crack that legal compliance framework story?
Okay, I've just put a couple of names over there. You guys should research what has been the experience, because people have tried to crack this problem. But obviously, always good to see what their experience have been, where they faced roadblocks, what was good and bad.
Kaustubh, maybe you can talk about the first asset you guys have plugged in.
Yeah, so we're still in talks. I think we should have that asset plugged in by the mid of September. Yeah, so the asset gives around returns of around 10 to 12% on an annualized basis. Right? What? I heard someone talk.
Yeah.
I couldn't hear. I think Tarang was talking.
No, somebody had unmuted. Sorry, you were saying.
Okay. No, so like I said, we're in conversations with one of the, in fact, we have a pipeline of around 3 assets that we are evaluating to get in streams. So the first asset that we're getting in should give you returns of around 10 to 12%, right? So that's the kind of asset that we're looking at right now. Like I said, since we are still in conversations, I don't really want to commit to anything on this call right now. But yeah, that's the kind of asset we're looking at, and it's a credit-worthy customer.
All right. Next question is from Sitaram. Sitaram, if you can also state your organization. No, not here. Okay.
Yeah. So I am Sitaram. I am from Chennai, Radiance Energy. So I am colleague of Arjun. So my question is, since it is a new...
And your question?
Yeah. So my question is on the green invoice discounting.
Right.
So since it is a new idea, I am looking at it as a short-term investment. So what will be the return, and how you guys will protect the my investment? What is the safety aspect? Right now I am not interested on the long-term investment. If we want to test this product, I can start with the short-term investment.
Right. So invoice discounting as a product, we're not launching immediately with the product. The launch that we're seeing in October. We're looking at it coming sometime around November and December. We're in conversations with some of the startups here in Bangalore. Electric mobility, for example, some of the startups here who would give their invoices to us. Now, the invoice discounting side of things, the trade finance side of things is something people know of, but like we said, we focus entirely on the invoices raised towards the procurement of, let's say, EVs or these equipments, right? Renewable energy equipments. The returns that you probably look at on an annualized basis is between 16 to 17%, right? Now, in terms of recourse itself, there are quite a lot of things that we're evaluating. One of them being that if there is, let's say, a late payment that would happen, you'd get an additional interest, right? For the additional period that is kept in there that you've not received your interest for on time. The other thing is we actually have recourses backed on, let's say, the enterprise or the vendor itself, which in our case, on a mechanism basis, we have a blank check from them, right? It's an undated check, which we keep as a backend with us. if the guy does take time in trying to pay his or delay his payments, we would basically encash that check. We have built a credit risk model internally in our team. So we are ensuring that the data of the kind of people, invoices that we are onboarding, and the kind of vendors and enterprises we are talking to are top tier. So that really shouldn't be an issue. But if there is an issue that comes up, we give you security in terms of giving that additional interest, as well as having this check sort of a backlog on our side to ensure that if at all the guy defaults, we'll probably encash that.
Okay, great. Thank you.
Yeah.
Saptarshi?
Yeah, I have, my first question is, which private blockchain platform are you using?
Okay, so we are making use of Hyperledger Fabric.
And are you considering any tokenization in your roadmap ahead?
Yes, we are. So I didn't really plug that story into this presentation, but that's a good question. So what we do is we do tokenize the asset, right? What we believe is a huge operational challenge today is when you look at an asset as, a commodity, or looking at an asset with physical papers, right? Piles and piles of documents. The easiest thing to do is to digitize that asset, and tokenization is where we come there. We have two levels of tokens. The first one is called an ownership token, right? An ownership token basically represents that asset in the digital form with characteristics like the return, who originally owned it, who is the off-taker, what are the returns and things like that. Identity token. And then we have ownership token. For every asset, we have 100 ownership tokens, right? Each ownership token represents 1% ownership in that asset. So let's say you were to buy 1 lakh of an asset that costs 1 crore. You basically own 1% of that asset, which basically means you own 1 coupon. So every asset has 2 types of tokens, a fungible token and a non-fungible token. The non-fungible token is basically the identity token that represents the physical asset in the digital form, and a fungible token that represents your ownership, right? To an investor, we are really not going to show that out to them because it sort of complicates the process. For people like us who would probably use liquid funds on PhonePe or just go to a bank and insert the amount into the front end and say, this is what I want to invest. The idea of showing tokens isn't exactly something we found good for investors like us. There'll be a lot of questions and issues that will pop up. But internally, for auditing mechanisms, our entire asset class has been tokenized, which is where a fractional blueprint also comes into play. Because the idea of this identity and ownership tokens work both ways for any asset classes that come in.
Okay, and the other question is, you have mentioned that anybody can go ahead and invest any amount of money. So you are offering liquidity in the investment portfolio. So are you having any flexibility to consider a PPP model in your business strategy?
So what we're doing right now is, at least for a launch, we're going to stick with 3 months, 6 months sort of a lock-in period. But what we're trying to do is to talk to a few HNIs and see how we can build that market-making position, right? The market-making position would basically allow us to allow this entry-exit at any time, right? We like that idea of you putting in your money for a day and then taking it out the next day, but earning the returns for that 1 full day. So we are in conversations to see how we can take up the market maker position, which allows you to come in for that single day, get out again at any other day, and earn for the period that you've invested in. So right now, for the liquidity that we're promising, the market making position that we're taking is the answer for it.
Thanks.
Okay, yeah. Sebastian.
Yeah, sorry, shouldn't talk when still muted. My question was very simple on how, it was answered in part, but how do you evaluate the risk of a potential investment? We've seen a couple of links here in the chat on other platforms, which are usually very specialized, for instance, in rooftop solar or large scale solar. You seem to have a whole potpourri of sustainability solutions, which makes you kind of a jack of all trades. So how do you evaluate the risk of a potential investment?
So risk, so like I said, right, internally for us, we've built a credit risk algorithm, right? In terms of the kind of people who are coming in right now to start with or to begin with, we've partnered. So first things first, the two of us, right, Vinay and me, The solar industry side of things is actually a black box for us initially, right? What we are good at is in technology and the finance side of things. To understand and make this more simpler for us, we've actually partnered with people like Ravi, right? Who is the CEO of Dexler Energy. He gave us SusTalk recently. These are the guys that actually, first things first, to help us in getting some of these assets onto our platform. Now, in terms of analyzing the risk, we take credit rating right now as the only basis of saying whether the product is risky or not, because timely payment is what is important to us, right? The initial criteria is to figure out whether the returns actually match our benchmark of 10 to 12%, which if it does, the next thing that we're going to look at is the credit rating of the user. To have another layer of protection, what we do, like we said, is have that credit risk model run on the off-taker itself to ensure that we are doubly sure this guy is going to pay on time. So if the returns are guaranteed through the PPA, like you said, the only thing we have to ensure is this credit risk analysis, which, like I said, we're doing.
Okay, Hari, Dilip Kumar.
Hello.
Hi, can you guys hear me? So first of all, like a really amazing idea, and I was really intrigued by your statement that like figuring out how to do it within our like legal compliance framework is really where the challenge is.
Right.
So I have two questions. Like one question is on that, right? It seems that the Indian regulations are not very friendly towards cryptocurrency trading, but would it be that because you are using a private tokenized system and a private like a kind of like it's not a very public kind of token, that those regulations would not apply to you, and you can do whatever you want? And my second question, I guess, is when it comes to the metrics which allow people to trade on your platform, right? I know it's not like rocket science, but do you see that there needs to be some work done to make the assets like transparently report, because sometimes those measurement systems can break down, and you know, like, is there some work there which needs to be done, like integrating IoT and blockchain into your platform? And do you see that as something which needs to be done for every asset or asset class which shows up on your platform?
Right. So to answer your first question, right, the tokenization model in a utopian world would be the full-fledged solution for us, right? So in a public blockchain, you create something called a smart contract that says, hey, listen, 10,000, 20,000, or actually around 1 million validator nodes are going to validate transactions that happen and things like that. In our case, in the private blockchain, though we are doing tokenizations of the asset, the tokenization and transfer of tokens allows us to generate real world reports, right? So to give you a basic example, we do an LLP structure, like I said, right? So partners come in, they enter into the platform as partners into that LLP, they invest into it. On an every 25-day basis, we end up giving reports that file the entry and exit of people. Now, it would have been difficult if we did it on a traditional database because the transaction levels would be very high, and backtracking those transactions would be difficult. So the tokenization here, to be honest, has no real world value, right? In fact, like I said, it's not really shown to any user as a tokenized model. The tokenization exists only so that we can have an easier auditability process. So tomorrow at the end of the month, if you came to me and said, hey, listen, can you tell me all of the entry exits that have happened into this asset? Can you tell me how many people bought this asset? Can you tell me what are the amount of fractions that have been transferred between people? It will probably just take me a click for me to go back through the chain, evaluate all the tokens that have been transferred, and give you that data. So to answer that first question, private blockchain and the tokens there do not really have any real world significance. It's just a mechanism and a tool for us to audit the process better. Coming to your second question, I think that's an answer that we have to solve. That's the thing that we have to solve collaboratively, right? I would probably jump a little ahead and say, which is probably the reason why we are here today in this talk to talk to all of you guys. The idea of this impact standardization comes with the fact that we all come up with a standardized process, right? This is not something that I'd probably given as a solution and say, hey, listen, we can use IoT or we can use blockchain to give in real-time data. It can be done. But when all of us collaboratively work in building that standard, I think we should be able to solve this problem. But for the time being, with the existing APIs that are available in the system itself, we take the data from there on a real-time basis and put it into our system. But yes, I think that's an area of exploration we are going to look at. And we'd love if people like you could come in and help us with it.
Awesome. So thank you. The answer is, yeah, I'd love to hear more about this system. I just want to sneak one small question in because nobody else has raised a question.
I'm sorry, like if we can save that for a little bit later, just because we have a session after this too.
Okay, no worries.
I'll give you their email as well.
Yeah, that's better. I'll talk to them directly. Thanks.
Yeah, because I want to end on one last note. Pyse team, we like what we see. How can SusMafia be part of this? How can we help? What is your ambition for a collaboration with SusMafia?
Right. So, see, there are two things that we're looking at right now. Right? We're looking to launch the product, obviously, in the coming month. We're doing a limited launch, right? We're doing a limited launch where only 200 people get to access it. It's an invite-only access. I'd love it since you guys are already into the sustainability space, since you guys already understand this domain well. I would obviously love all of you guys to come in as investors on the platform to show that there are people who genuinely believe in this idea, right? So what I'd ask is if you guys can go to pyse.in, feel free to go through our site. What we do is given a little more detail. Go down, drop in your name and email ID. That's all we ask, right? It shows that there is genuine interest in a product like this. We will keep you informed on the launch of the product, the processes, the things you'll have to go through. So we'll make the onboarding process a little more seamless, right? The second thing is we want to have continued collaboration with you guys in that entire community engagement model we spoke about, right? The idea of creating that collaborative network, the idea of defining standardized impact scores. These are things we believe has value when people like us contribute together, right? Like I said, if Pyse goes in tomorrow and goes and tells you, listen, I have 8,000 apples, 8,000 mangoes, that guy's like, thank you, I'm happy you have it. So I want people like the ones who've asked me questions here today, across the diverse sustainability domains to come in and say, listen, we can come up with 150 different impact factors. And if tomorrow, let's say someone like Britannia would come in and say, I like your concept of, let's say, impact story or impact score, I'd probably put it at the back of my biscuit cover that says how many jobs I've created, right? I want to have more conversations with you guys on building that model itself, because it not just benefits me, but everyone else in the group too. So more continued conversations on this, possible partnerships in saying, hey, listen, you have a unique asset class that would benefit a retail investor too, by allowing them to invest in it. Pyse would be happy to, list it on our platform as we standardize the process. So that's pretty much it, Ani. That's what we're expecting.
Super. Thank you all for being here for this SusTalk. Thank you to the Pyse team for presenting us with such an ambitious idea. I think the ecosystem is ripe for green financing business models.